Order blocks are one of the institutional reference points in which the institution always make reference to. Now, what this means is these are areas of interest or point of interest, as some will always call it, where institution always come to pick order. Now, your ability to be able to spot these points, these areas, or these zones will really help your trading, because if you can spot these zones correctly, you can have an idea of where to enter your trade from. Now, what if I show you how to be able to spot the most valid of order blocks? What if I show you how to be able to spot high probability order blocks, thereby helping you have more of A+ setups, high probability setups? And that is all I seek to share with you in this particular video. Hi YouTubers, this is Mr. Promise right here from Green Promise Institute of Trading. As you all know guys, this is the first evangelist, world-class financial market analyst, institutional trader, and the mentor who mentored your mentor guys. So guys, before I proceed, do me a favor right now, hit the subscribe button and make sure you also turn on the notification guys, and make sure you share this video to a trader. No, they hide updates, dear traders. Okay, so quickly let's dive down. Now currently I'm on this trade. I caught this trade based off the concept I'm going to share with you traders right now guys. Now order blocks are very solid. Now first of all, I'll start by explaining to you the psychology behind the formation of order blocks. Now the whole idea behind the formation of order blocks is very simple, pretty simple guys. Now let me just do some little textbook example right here before we go down to the chart and I show you all of that guys. Okay, all of that. Now some textbook example right about this level. Now the whole idea behind the psychology of formation of order block is, for instance, we have in an uptrend prices buying, going bullishly like this. Okay, we see price keep forming at higher highs and higher lows. Now it is believed, okay, that there is always going to be that movement, a sponsorship around zones such as, let's say this area right here, let's use this area as an instance. There's going to be a last, since this is a buy example, a last sell candle around this zone right here, in which there's going to be a protruding buy candles, series of buy candles. There's going to be an aggressive displacement to the upside, several buy candles. Please take note guys. Now these several buy candles, they will just keep going until they cause a valid shift of market structure right about this level. Now once this valid shift of structure happens right about this level, now that last sell candle around this zone, okay, is usually considered as our order block. But when you go down to the chart, you'll notice that there are going to be cases whereby these order blocks do fail. So the whole psychology behind the formation of order block is, now the formation of order block is in such a way that the institution, they actually use this level, they use that block to cause a sponsorship. Now for the fact that there was a buying around this point, now it is believed institutionally that once there becomes a return to that particular zone where there was a very aggressive or a big movement that happened in the market, there is a possibility, there is a high likelihood of this particular zone still sponsoring another big movement that is going to make traders to make good profit. So this is what most traders seek to capitalize on, and that is just the whole idea behind order block formation traders. That is just the whole simple idea. Now the most valid order blocks, please take note of this, most valid order blocks must do these things. If you do not see this thing guys, be careful of that particular order block. Now scenario one guys, the most valid order block must do these things. One, there need to be liquidity taking. There need to be a sweep of liquidity, okay, off that level before an instant break of structure. It means one, sweep of liquidity. Two, just after the sweep of liquidity, there need to be a break of structure. For that block to be formed, there needs to be a break of structure right here. So 1, sweep of liquidity right here. 2, we now got a break of market structure. 3, we need to see that there is a fair value gap inside of that leg, that movement that actually caused the shift. So once you see the fair value gap, guys, now all we are just going to do is what? Wait for what? A return to this other block right here, that other block, and we seek to go long from the other block, guys. It's pretty simple. Now we seek to go long from the other block. Now bullish order block are regarded as with positive sign. We use positive sign for them, while bearish order block we use negative sign. So if you see minus OB, that's negative OB, that's a bearish order block. So bullish is positive sign. So this is a bullish order block in this example given. So if you see these three things, guys, this is a high probability order block. This is the third. So we said number 1, liquidity taking. 2, a break of structure. Now there needs to be a fair value gap, and now price what? Return into it. Now this is the first example, guys. Now you might not see some scenarios like this. There could be scenarios whereby this is the first scenario. Please take note of this. Let me just clone this quickly. Now there could be scenarios where this may not be the case, guys. This may not be the case. Now what you see in those scenarios is you see that price may give you something like this. Price may come down. Now price will ignore the other block, maybe trade from this fair value gap above, came back again to test this particular level and keep going. Now this is what? A second scenario. Still a valid order block, guys. Still a valid order block. Now the third scenario that I'm going to share with us is the last scenario. Now there could be time where price could do something like this. Price might just do something like this. You just see corrective move coming down like this, corrective move, and ultimately they reach the other block and kaboom, guys. Now take note of these patterns right now as I show you some real chart example right here. Now look at this. This one was the case of what? The third example. Did you see how it goes? Now look at this. They took liquidity just below this low, broke structure instantly. There was a fair value gap inside of this leg. Can you see that? And what did you see? Corrective move, order block, kaboom, and ultimately we're expecting what? TP at that level. Guys, can you see that? Very simple, guys, and straight to the point. If you notice this, it meets all our confluences. There is a fair value gap inside of the displacement leg, the movement that actually caused a shift of market structure, guys. Can you see that? That's the fair value gap right there. Got liquidity taking, a shift of structure, and corrective move to our order block, and kaboom, guys, kaboom, guys. So this video, it's actually for traders that they've been trading order block for some time, but you don't know how to identify the most valid order block. That's why I did this particular video for you traders, guys. Okay, now I just hope this video really help you traders. Now let me share with you an example I took on gold. I took a trade on gold. It was a trade I took on gold. Yeah, look at this. So you can use, let me show us a trade I took on gold. So this trade I took on gold was pretty much via the same principle I just shared with you guys. If you understand this thing, I'm telling you, you will tend to have just high probability order blocks that you trade. High probability order blocks. Look at this, guys. It may not really show but look at this. I hope you just get it. Number 1, there was liquidity taking below this level. Number 2, instantly I got what? A break of market structure right here. Can you see that? A break of structure right there. Let me just do this. There was liquidity taking. This was the movement right here. So all of this was just liquidity taking. This was a break of structure. And what did you see, guys? This was now what? A return to this one. There was no corrective. The corrective, it just came down to the other block. This was the case of the first example I shared. Can you see that, guys? Kaboom, guys. From that zone, from the other block right there, it just what? It just sniped and it just kept going, guys.